Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, March 1st, 5:36 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in a consolidation, bearish consolidation under the 200-day moving average, actually under all of the moving averages, which you'll see momentarily. Bright spot, fourth day off the bottom, we haven't undercut. We had a big counter trend washout last Thursday. Another up day on Friday. We've consolidated for 2 days since then. The action really hasn't been good the last 2 days. It hasn't been a quiet consolidation. It's been some distribution, and that's not what you want to see when you're trying to get the market, when you're trying for the market to find its footing. Check over here on the trend gauge. Still neutral on leaders. Our 2121 is holding up fairly well, but some stocks that were on that list really, and some prospective leaders really got hit today, down 4, 5, 6, 7%, and that's not what you want to see when a market's trying to rally. That's distribution. So the arrow went from green to black on there. We're just neutral on leaders. In fact, we are now at 100% cash again, and I'll talk about that momentarily. So short term, Monday, Tuesday got close to the 21-day moving average on the S&P, but making lower highs since then. So we're still bearish, still off the low. So we're showing a combination of the red downtrend bearish arrow with this might be the Lloyd Christmas. So you're saying Lloyd Christmas from Dumb and Dumber. So you're saying there's a chance, green arrow. You might be able to look at it that way. Same thing, medium term, 50-day moving average. We've been trending under there for a month and a half. Long term, we're trending under the 200-day moving average also. So not good action on the indexes. Basically, what we're looking at now is that this was just an oversold bounce, 2 days, no price progress the last 2 days, and in fact, some leadership acting not so good. What happened today? I can summarize it with the title Bears Overwhelm Bulls. We started out with a gap down of about 0.2%, and we just really made lower lows all day. So not quite a trend down day, as there were a couple of counter rallies in there, but every time we tried, we failed. So Bears Overwhelm Bulls. And it was selling across the board: big caps, mid caps, small caps, growth, value. There were really, the pockets of strength were tied to commodities and some stocks that are tied to those commodities, gold and oil, specifically copper, and bonds did their job today. But bears overwhelm equity bulls. G6 down 1.8%, S&P down 1.6%, NASDAQ 100 down 1.5%, Dow down. NASDAQ 100 led momentarily for a while this morning, but just really gave it up as the day went along. And that's, again, when you're trying to establish leadership, that's not what you want to see. Dow down 1.8%, mid-caps down 2%, Russell 2000 down 1.9%. I said bonds were positive today, so that did its job in a broad world diversified 60-40 stock bond portfolio, down 0.7% on the day. Protection down 1.2%. Percent on the day. That's our a composite of our internal flagship portfolio account. So let's get into the tail of the tape and some charts. But first, let's take a look at the team here at Revere. You can reach out for any of us if you have an interest as a person that's approaching retirement and you don't want to see your nest egg take a significant hit. Give us a shout. You don't ever get hit over the head with the 2008 2x4. If you're a client at Revere Asset Management, you can email any of us, Dan, Tim, Hunter, Muriel, or Don at revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932, completely transparent. We do videos 5 nights a week telling our thoughts on the market and what we're doing, what we're watching, our bull case, our bear case, what we're buying, what we're selling, our exposure. A lot of transparency here. We talk it through, educate clients, educate investors, and that's just what we do here. Give us a shout if you want more information. Let's go to the charts now. First, let's go to 3 charts in particular. Well, let's just go in order here. First, we'll do the tail of the tape. So let's start off at the top. Consolidation rally day 4. I talked about that. Continued headwinds, U.S. dollar inflation, Fed tapering, rising interest rates. Rates have been dropping though, as bonds have been getting a safe haven bid with what's going on in the next headwind, Russia, Ukraine. Put call, as even though we were dropping today, the put call dropped along with the market today. That's kind of odd, frankly. Uh, Closed at 0.98. VIX elevated 33.3 up another 10% on the day, was as high as 35.2. Fear and greed, the lowest it's been in a while. This is showing extreme fear now at a 19. So our bull case, want to initiate a rally. We got that on 224, but we're not reclaiming any of these key moving averages, not the 21, not the 50, not the 200. So this is let's change the color of this rally to reflect really what's going on to something more neutral, yellow here, because the last 2 days were not really what any bull wanted to see. Bear case, we got that on 217 when the S&P broke back through the 200-day moving average, and some heavy selling since then, resulting in a washout last Thursday and an attempted recovery, but no bueno the last 2 days. So on the news front, continued Russian sanctions. The Russian economy is collapsing. The world is pretty much joined together in doing everything they can to cut Russia off from the rules-based society that the West tries to live by. Some of you will laugh at that, but I've seen it defined that way. So coming into today, I was looking for, we were within 1% of the overhead 21-day exponential moving average on the S&P. I wanted to see, would we challenge it? What happened when we got there? Never happened. No challenge. It was a weekday, and week as in W. Yes, it was a weekday. It was Tuesday, but it was a weekday. No challenge. Trending lower all day. Opened, as I mentioned, with the 0.25% gap down. We had 3 waves down to 4,300, which has been a support level. We undercut that, tried to rally, and then just chopped into the close. You'll see this when we go to the charts momentarily. And simply put, my note for today was more sellers than buyers today. So you can see the bottom line. After a 2-day retreat, the bulls need to show up. Let's revisit this on the charts, and here's what we're looking at. So this is the S&P 500. Let's go intraday on this. Let's go to a 5-minute chart. Well, let's go to a 15-minute chart so you can see the move off of the lows. Here's the big move. This is Thursday. Big gap down. This is when Putin escalated things. And then following to the upside on Friday. This got us near the top of the range, that 4,400 area, right below the the declining 21-day moving average. Yesterday, good close, kind of a consolidation day. No real damage to leading stocks, but today was different. The little bit of a gap down, and then here's the 3 waves down I talked about. 1, a little bit of a bounce. 2, a little bit of a bounce. 3, we got to 4,300, which has been support on the left side of the chart. Tried to bounce, came down again. It undercut but held again. Tried to bounce, failed. Did bounce a little bit into the last 10 minutes to close right above 4,300, but it was more the way broad selling across the board today. Like I said, small, medium, and mid caps, and value and growth. It was like people just wanted their money. They wanted to cash in their chips after the bounce the last couple of days. So not good. 2 closes above the 80 MA. That's the purple line, is all we could muster. Back below it again. So the bulls really, it's day 4 off the bottom. 4 through 7, days 4 through 7 off the bottom are the sweet spot for what we look for, and that's a follow through day with a strong move higher, some leading stocks acting well, and we had several of them. We got into several of them. We're looking for some follow through, but we certainly didn't get it today. And we'll look at some of those charts momentarily, but definitely not a good day today on the S&P 500. Volume was lighter on the S&P, but the NASDAQ volume was up, so we logged a distribution day there. So you can see some relative strength. We had 3 days up, actually, on the NASDAQ. Yesterday it outperformed, but again, got close to the 21, turned tail again. And it was some individual stocks within there that really did not have a good day. Semiconductors were just bludgeoned today. They tried to get back above the 200-day moving average, Friday and Monday, but gave it up. Again, ran into the declining 21-day and the 200-day and broke back below it today. Terrible, terrible day for semiconductors. We got stopped out on AMD with a 5% loss, 3% size, so 0.15% hit to the portfolio. We had two closes above the 21. Just no buyers at all today. It was like, again, people just wanted to get rid of AMD for whatever reason, and the stocks in particular, all semiconductors, were pretty much hit today. Let's finish off the indexes, and then we'll go to some individual names. Dow Jones Industrial Average, yeah, that's not good. Actually broke below its Friday lows and closed. Let's see. I don't think that happened in the other big cap indexes either. No, they did pierce the Friday lows also, but closed slightly back above it. Again, this 4,300 level is really a serious line in the sand. You can see it back over here. You can see it here in September, October. You can see it here in January, and you can see it recently too. That 4,300 level is huge. Mid caps, MDY actually had two closes above the 21, gave it up today. So, anytime you get try to get anything going, the bears have been overwhelming the bulls lately, and that happened again today. Really not a good day. I think I've said that about 17 times now. So same situation with small caps, two closes above the 21, undone today. So how about some individual names? AMD, we got stopped on this today. So really, here's how we re-engage. So we've got that 9% rule where really once we're down 8% off of a high in our portfolio, kind of the equivalent of alarm bells go off, and then we give it like maybe 1% up to 9%, but we definitely want to be out before that, and we were out before we got the boot here below the 200-day moving average. We tried to rally, re-engaged, gave up about a little bit less than 1% that way. Went to all cash again last week, but on this big shakeout, again, I mentioned in the video, if we got 10% below the 50-day moving average. That's been a pretty reliable washout signal, especially when you close at the top of the range after you get it. So we re-engaged, and at that point, when you re-engage in a market where you went to all cash, what you're looking for is you're going to have some risk. So we risk, no more than 2% of the portfolio at that point. And what we want to do is have our gains finance our risk. So we'll start off, not wanting to lose more than 1%. In this case, the gains from Monday or from Thursday and Friday were about 1.2%. We gave back 0.1% on Monday and then another 1.2% today. So we're 0.1% below where we were last time we went to all cash. So we took a shot. If it followed through, there were certainly some reasons to be optimistic, but those reasons for the most part fell apart today. If you look under the hood of the market, the only things really being successful are commodities and stocks tied to those commodities, and that's not going to lead a market higher. There were some green shoots with growth stocks Thursday and Friday. They held up fine on Monday. They did not hold up fine today. Let me show you an example of something that we got into on Monday that I was very optimistic about. Aerospace stocks are working, steel stocks are working. How about a steel stock that specializes in the aerospace division? Nice move off the 21, breakout from this nice 6-month long base, 24, perfect. Got my breakout. This told me very quickly, however, it's not a breakout market. We're always looking for the transition to a breakout market. Thought we might have had an opportunity. We didn't. We got stopped on this today. Out of the portfolio. Also got stopped on DOX. We bought this twice. It had been acting well. This is really a market call. I said we didn't want to lose the gains that we have acquired since we re-entered the market. So when this failed to follow through yesterday and sold off today, we got out break even on this. We got out for a 1% loss on Datadog as well. One of the better looking charts, nice move up off the bottom, had the earnings gap up, didn't give back a whole lot, strong volume as it reclaims its moving averages, but tried to move out this morning. It was strong all day. Look at this 15-minute chart of it. Strong for the most part in the morning, and then just little by little trickling lower, giving it up as the market got weaker. So And then we had our core. We took our profit, about a 5% profit in the Qs. That was the first thing that we bought on the slingshot day off the bottom. Got into the 21 when it failed. We cashed that out. So we had that gain to finance the other things that we were still in. And then when those stops were hit, as I said, back to we wanted to get out break even. We got out less than 0.1% below where we started. At this point, worth a shot, but we'll see what happens over the next couple of days as we can dip a toe back in if the market calls for it. But really, we want to see. I don't want to do the washout. You can do the washout trade again. It's fairly reliable. It's good risk reward, but then you got to have follow through after that, and that's really what failed today. VTI was the other big core position that we took on the slingshot. This is broad, large cap, medium cap, and small cap. But again, ran into the 21 reverse, so we closed that position out for break even today. So like I said, break even since we re-entered. And bottom line, after a 2-day retreat, bulls need to show up. They certainly didn't show up today. Let's see what they have tomorrow. So here's our key levels. That's what we sold today. I mentioned, showed HWM, DOX, VTI, AMD, and Datadog. Oil service stocks, OIH. For example, Halliburton down 4% today. Schlumberger, a terrible day. The producers were up today. XLE, the XLE stocks, which is primarily Exxon and Chevron, those were up nice today, but the oil service stocks got hit hard as if oil wasn't up. Oil was up 6.4% today, but only really the oil producers, XOP, participated. I said bonds had a good day today. That means interest rates are actually falling. Let's take a look at the TNX, the 10-year, very quickly. This is not what the Fed is expecting. This move down, that's a pretty big move down with a gap and go below the 50-day moving average now. But this is primarily because of a flight to safety bidding the price of treasuries up. When the price goes up, the yield goes down. Not helpful to the Fed when they're trying to raise interest rates to stave off inflation. Newmont Mining was something that worked today. We did have our eyes on GDX for a re-entry, but with the other pieces of the portfolio not working, we didn't plunge into it. XOP, as I said, continues to work. Second day higher after that breakout there. Bitcoin and Ethereum. This is the BITO, is the futures ETF that trades in sync with the futures. Nice move up off the bottom. Really, I've been a Bitcoin skeptic, but when you see the Canadian government just arbitrarily deciding that they're going to freeze the accounts of certain peaceful individuals on a whim, and then you see the Russian ruble collapsed, you can very clearly see the case for Bitcoin. But it's been bid up as an alternative. Normally it moves in sync with the Nasdaq, but today it certainly did the opposite, a move up while tech stocks move down. I guess people are recognizing the value of something that is somewhat anonymous, although some countries have been asking the crypto equivalent of crypto brokers to freeze the accounts of anybody in Russia. So that flies in the face of what's going on with crypto. And frankly, governments can do just about anything they want to do anyway. Don't make me get off on a tangent. That's going to wrap it. So where are we? Below the 50-day, below the 21-day. Tomorrow we need to see the bulls show up. We gave back a good bit of the gains up off the lows. We're back to 100% cash in-house here as we flail under the 3 key moving averages. And that's going to wrap it. As always, I'd like to hear from you. Email don@revereasset.com. The phone is 855 Real Wealth. Wrapping up first trading day of March 1st. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.